Hi, everyone. Excuse me. Hope you're well. It's the 9th of October. We are 2 o'clock here in London. It's 12 o'clock. Sorry, it's not 12 o'clock. It's 1 o'clock, 1300 hours GMT. And the US market, US traders are at their desks. The US market opens in about 30 minutes. Obviously, there's no data, there's no economic data. The ongoing political, it's not really, I nearly said political crisis, it's not a political crisis at all. It's a government shutdown, and it's benefiting both sides of the House. I think President Trump might come out of this much better than the Democrats. He's going to use it as an excuse to sever lots of federal workers permanently. They're furloughed currently, but there's some questions about being thrown out by the administration about whether they will actually get paid and whether they're due to get paid. It's right and fair, according to despite what the law says, 2019 law. But this new government perhaps thinking a little bit differently. It's got nothing. Obviously, it's not the fault of the workers, but anyway, we did have a speech, pre-recorded speech from Chair Powell earlier, but there was nothing in there that was going to sort of move the markets particularly. And I just want to I look at a little different setup today. I've got some Renko charts on here. Those of you who are not familiar with Renko, it's a bit like it's the clarity you get with I'm a big fan of Heiken Ashi candles. Well, Renko was something where I used before. I got quite significantly into Heiken Ashi candles, and again, it's the simplicity, it's the clarity of what we're seeing. It's one that you need a bit of discipline, a bit of patience, and just let it run. See what happens. Here, I've got it on the. I just opened two trades earlier on when they triggered. Looks fairly positive. One was on gold, and the other one, which is in the money, and the other one was on the Nasdaq, which is out of the money at the moment. I don't know if that's going to. No, oh yes, it is. There it is. Oh, there we go. And because of the vagrancies of my trade locker at the moment, I'm not sure how many of the lines are going to stay on, but we were anyway. I'll come to how to trade with Renko. But as you can see, it can run quite strongly, like a strong trend. So here, this is the 5-minute chart on all these demonstrations. As people were asking me, you talk about live trading, but you don't actually do any live trades. That's just fair criticism. But obviously, guys, just bear in mind this is a simple demo account. We're using simple 0.01 lot size here. There's no actual real live trading going on in here, but you can see the principle, which is all I wanted to demonstrate here. Okay, so basically, one's quite significantly in the money, and one's just about out of the money at the moment. So, but the principle is the same. The thing with Renko, guys, just ignore the moving average here. This is the 50-period moving average, the blue line here. On the two live things we've got open. We'll come to the news in a minute. The thing about Renko is it takes a while for the boxes to form. Okay, so basically, if you're looking at a strong trend, what you'd like to see, or what I like to see, is 3 consecutive boxes of the same color, whether we're going long or short. And as you can see here, when we have trending markets, they can run and run, but I'd say patience can be key. Those of you that are quite switched on will immediately draw your attention to why I went short when I did here about 20 minutes ago, or whenever it was, on this candle here. Basically, we're looking at lower highs, lower lows. The trend seems to be going down. We've got a longer down leg than up leg. That last up leg was all those boxes there. The last up leg was 1, 2, 3, 4. The last up leg was 1, 2, 3. And here on the short time, that was sufficient for me to look to take this short. Obviously, we've got the vagrancies of the volatility of the opening trades. Obviously, we still get the same movement as far as the spread and the movement of the price action. But from a Renko box point of view, you only get a new Renko box plotted when the situation is either tipped we've gone consecutively lower, or we've gone consecutively high before the Renko box can be plotted. So at the moment, we've got the current box, the 5 minute. This is a 5 minute boxes. Remember, plotted back up. So that's hence we're out with the money. This is our entry. Our stop loss is up here. The all-time high. The all-time high we had earlier on the Nasdaq. Obviously, that could all change on open. It may well do because we haven't got a lot of data feeding the markets, but obviously the big geopolitical news overnight of Hamas and Israel come to some sort of peace deal or agreement, shall we say, a release of hostages, the first stage release of hostages on both sides, has obviously lifted spirits generally. So success there, or it looks like at the moment. So immediately, if we just take this up to the higher time frames, we had a big old rally this morning. Yes, well, this is the hourly chart here. A positive close yesterday. We were up 1.12% on the Nasdaq as the news started to break yesterday, and we closed at all-time highs again on the Nasdaq and the S&P 500. Now we've gone long again this morning. So if I just move that down there. And then these all-time highs appear at 25,180, and my stop loss is here at 25,085, and we'll just see where we go, basically, won't we? On here, this one. Similarly, on the gold market, it's the other way around, but you can see the gold was a bit more a similar pattern. Okay, so we'd had a leg down. We'd had a strong leg up. We'd had three boxes down. That looked like that should have continued down. It didn't. We found support at the 50-period moving average, which was enough to spike my interest. We then had four boxes up, and we'd had a leg down. So I'd bought around about here. This could have moved down again, obviously, but it was just a turning point. And so I got in here as this started to turn green, and we were long at 4,041. And we've just got to our target. Might actually take it. Did I actually put a target? I didn't actually put a target in, but that was the target. Obviously, this all-time high up here at 55. So we'll close that as it's hit target. As it's still running. I could simply pull up the stop loss, which was down here at 40.28. There's our stop loss here, the grey line, and our entries here. So we're 1-to-1 risk reward. Happy to go. So that looks like that may continue to poke higher. So again, this is a normal expected move. We got a negatively correlated move. So gold's going up and stocks are going down. That's what should be happening. That's what we've got here. So we're selling the Nasdaq and we're buying gold. So gold's played out and the Nasdaq hasn't. So at the moment, obviously. So we'll see where we go. But again, Renko is very simple, very clear. I say patience is always needed, even in these short time frames. But really, best if you've not used it before, it's best to wait till you get a 3 candle completion. As you can see here, that wouldn't have worked out. That wouldn't have worked out. Down to 3, that would have worked out, and then you come out when it turns round. 1, 2, 3, that would have worked out. Then it's gone down again, but that's gone up again. So down, that hasn't worked out. That didn't work out initially up, but then we got a big, nice run through there, and that's a key one there. A close and a break of a key, another indicator you're using. I mean, here it's the 50 for me, and then you can see here this provided a resistance area this morning in the Asian session. But again, you can see the lows were bought. Nice run there, downtrend there, up link there. Didn't work out that downtrend. That was enough to get me in, and now we've got 1, 2, 3, 4, 5. So we still keep mowing. I'm happy to take. Let's close that out now. So you can see I do some line threading on our position. So we've got out there at basically the high of the day, and we're out for a nice move to the upside from 40.28 to 40.55. So whatever it was, 50 odd, 20 odd. Dollars on that rally there to the previous resistance, this high of the day. So obviously never get too greedy, my friends. But this is still valid, absolutely valid. There's no reason I should have closed that, other than the fact we had got to the earlier high from yesterday's high. So this looks, the momentum looks like it's taken. If we had some momentum indicators on here, if we just stick in, I don't know if we put in the MACD, MACD, if it's going to actually work for me. There we are. See the MACD, that cross down here called MACD, their first Renko green there, and that's still running, isn't it? Here on this 5-minute time frame, that hasn't blinked at all. You can see the crossing of the MACD and the signal line. Let's move that a bit higher so you can see it. Let's move that down. Sorry, it's because all this is in, isn't it? Let's move that over now. Get rid of that. Let me just close that for now. I'm not going to take any more. There we are. So you can see, that's still running. So there's, again, as I said, there's no reason. You could have just drilled your stop loss up through the Renko bottles. And that's the other nice thing about the Renko system is, you could have had your stop loss here, and you can use the box. You can do the box as a count back for where you want your stop loss. So typically I tend to use like 3 boxes back. If the confirmation of the trend is confirmed after 3 boxes, and you get in here, you'd obviously want to start there and then just step it up, and that's exactly what it's doing. Because what Renko does, it doesn't plot another box until it's satisfied that all the parameters are fixed for this trend to be continuing. You don't get any sort of if we just flip quickly to a normal candle, you don't get any of the jittery indecision. See, we got red, green, red, green, red, green, red, green, red, green, red, green. When you're back to Renko, it's exactly the same time frame. It's just plotting the data visually in a different way, and that's why lots of people like Renko. You can see there's one red in this entire move up from here from 725. That can't be right. 725. These aren't 5-minute candles. Oh, they're 725. This must be. What's going on there? What's the 5 candles? Yeah. Okay. So it's the 5 candle setup. So it's moving to the upside. So again, plotting up nicely. And see there we are, the 1410 candle here as we've just gone around. So there we are. It's been with all-time high through $4,000 for gold. It's held that significantly. Is today's trades, and we've held the 4,000 level here. We went down to test it, but it's still very much to the upside. Let's take this up to the daily count. Oh no, it doesn't work. It's counting. If we just go to say the hourly, it's a bit better. It doesn't like it because it's trying to do all this maths. So there you go. I can see the strong trend. So it's the hourly count of the Renko is what the time gives you here. This a huge move we've seen in the gold market. So I'll just go back to the 5-minute time frame. As we've moved higher again. Let's say, okay. There we are. There we go. So, and say with other indicators as well, we are moving high. So, MACD, our 30-day, our 50-period moving average, keeping us the right side of that one as well. Markets panel, there we go. And what's the other ones on Nasdaq, wasn't it? So our Nasdaq is a little bit out of the money. Oh no, it's still in the money. I thought I was turning green last time when I'm looking at it, but no, it's still red. So moving down, perhaps our targets there. So let's have a quick look elsewhere. We'll just come back to the Renko charts in a minute. If go back to my VWAP chart working. Just about. Let's go back to my. Oh, it's got my high actually candle. Okay. I'll actually go back to my normal candles for this one for now, and to the hourly time frame. So stocks remain bid here. This is the normal candle patterns. This is the 50-period moving average. So stocks, I say, moved to all-time highs yesterday. and gold again at that, as we've just seen, that all-time high. Oil, which actually let's go crypto first. So Bitcoin went to 125,000, 126,000 yesterday, 126, nearly 127,000, in fact. Day before yesterday on the 6th. This is the that's saying 6th, 1900. I thought it was yesterday as well. We got 20 pounds. Anyway, the bid is very much in for crypto. Obviously, liquidity could become quite key for crypto, but demand has spiked that significantly higher, and since we started October, it's been a very, very strong start. Here's that low down here, that 108,000, 109,000 level we saw. Remember, we were looking at this on the 4-hour chart, weren't we, at the time? How it formed a nice base down here. There we are. We were looking at that, and that was the big candle up there towards the 28th, and then we broke to new highs here as we went through the key 112,000, and off we've gone through the existing previous high 123,000 and formed this new high over 126,000. So here, nicely, strongly bid on the 4-hour time frame. Some big, strong candles, but support on the 50 period here on the 4-hour. Bit more choppy on the short 1-hour time frame. So we rolled over from earlier in the week, Tuesday and Wednesday, but the floor here is around about that 120,000 has held as well. Certainly yesterday, Tuesday, yesterday and today, 120,000 has held here on the hourly chart, even though we've been under the 50-hour moving averages. We've rolled over. So here, technically, you'd like to see this. This to break. That's your resistance to the upside now, and we're right bang on it again to the upside. So we've got a bit of we've got a flat floor here, a wedge forming at 100 around here at 120,000. Let's put it down as a big round number. That's the 120,000 floor there. So you can see the so it's not absolutely spot on 120,000, but there we are. You see the resistance we had as we first went up there for a day and a bit, then burst through it, and we haven't yet come to as low as we had into that zone. So 121,000 so far this week is providing our support area. There's that 121,000. I'll stick it 121,000. There we are. So we've had buys this week at 121,000. So is this floor going to hold? Are we going to push higher? So that's looking like we may start to move down here on this hourly time frame. But we just tick it at one simple time frame. The 4-hour is providing lovely support at the 50-hour. So, but are we going to test this again? So we've had this 4 candle, big first candle move down to it, retrace, 4 candle move down to it, big bounce up. So can we hold here and move away, or are we going to breach this 120 going forward? So that's to look forward to later today and tomorrow, and over the weekend for crypto. Oil, I was just about to get on. We have had some inventories. The private inventories came out yesterday, but WTI, we see that from the OPEC announcement at the weekend that the production wasn't as big as many were expecting. We've had a rally this week from that, but we had gone all the way down to $60. So we'd broken out of that 62-65 channel last week, and this week we sort of managed to edge our way back into it, basically. So we're still struggling to get back into this channel. So it's still relatively weak. So this could fail at $63, and we could move down again. But so far for October, we haven't wanted to go under $60 a barrel. So resistance to the upside is where we are now, just above 62. holding 62 on an end of day basis would be good today. We're at 62,680 at the moment, so that's looking okay. And then the 50-day moving average sits at 63.62, and I bet the 62 20-day moving average is probably around about where we are now at 62.80. Just guessing, not off the top of my head. So we're this channel that we'd been in for the summer seems to have been broken down. So we were, remember, we're still looking left for the lows, which took us to this 58 cluster back in May, to the downside for oil markets. So we need to break over that key 50-day moving average at 63.60 currently, and some weak candles this week. Even though we've bounced up, nothing like the significance of the down move we had into the end of the month and the start of October. So watch that. It still looks quite weak to me. Dollar's come back with the news of the peace deal in between Hamas and let's put the dollar spreads on between Hamas and Israel. Dollar Swissy 80.30 at the moment. So dollar's lifted over the last few days. Back a significant move yesterday over the 50-day moving average. Caught lots of attention. Can we start to move higher? Remember the Swiss has been one of the best performing against the dollar this year. So the weaknesses of the dollar may be coming to an end. This is what this is sort of suggesting. But I've seen this earlier this year as well. We talked about this a bit in July, and then this nice rally we saw at the end of July into August. Obviously, the caveat was it was August, and then it sort of petered out, and then we produced new lows again here in the middle of September. So this looked at this point here, this looked like this was continuing to move down. It still may do indeed, but we've had a good day yesterday. It's too early to say if this downtrend is over. Well, we are over both the 20 and the 50-day moving average, and we did have a strong positive day yesterday for the dollar against the Swiss franc. So look at the size of that candle. We haven't had a candle that big for a couple of weeks. So a positive break of the 50-day moving average, and that's where the support sits now at 79.97. So bang on 80, and we're at 80.30 currently. Obviously, a close around about here today is positive, but we then back into this cluster area, and 80.50 would then need to be broken to the upside, and then 81, and then this 81.35 high we had at the end of July to the upside. So interesting one. Dollars picking up against many currencies, but the one it's struggled with this year, the major currencies it's struggled with this year, it's picking up against the Swiss franc as well. So that's always an interesting one to have a look at as well. The original trend line there was here, and it's sort of moving out, so it's a better rally. You see what I'm saying? But when I'm saying that, when you have I know I'm sure a lot of you don't do it, but trend arcs and fans, that would have been your first trend line, daily trend line here. Let's see. To the 50-day moving average, and we had a move up. I'm going to lose all minutes, aren't I? Now we've had this consolidation here, end of September, beginning of October, and we've got a new, it's only 2 touches, but new trend line forming here. So this horizontal resistance on the 50-day, just shy of 0.80, is in play as well. So we are starting to show a bit of emphasis. That's just bringing out that attention to you. That's strength for the dollar against the Swiss franc, which it's lacked quite significantly. 52.65 is the dollar yen. So we're down a wee bit from the highs of earlier today, but you can see the announcement of the new Iron Lady as the Japanese Prime Minister has weakened the yen significantly. And we're at 52.65 over the key 50 level. I'm going to put the 50 line on here. I'm going to lose it because of bleeding trade lockers vagrancies at the moment. But let me just put that on there because it is a significant level. 154 dollar yen, 150. So how long we hold this is many will be questioning. Text. Let me get thicker one because it's 150. Okay, there we are. So there's 150. Breached it on Monday following her winning of the leadership of the Liberals in Japan, and continues. And we've moved higher every day since. So again, putting pressure on the Bank of Japan. Any chance of raising rates looks like to be going out of the window. So 52.70 is where we sit at the moment. Plenty of fresh air up here, isn't there, for this to continue to go higher, if indeed the bid on the dollar continues that we've seen in the last couple of days. Dollar CAD 139.50, so 150 is back in. 140 is back in sight. We had a position on this, didn't we? I think it's closed. I think it got stopped out. Dollar CAD, wasn't it? I can't. It's not my notes here. Can't remember. I think we were short, weren't we? But no, we were long. But I think we got. I think it sort of went against us. But I can't remember when it was from. But anyway, you can see. We're still. It's the daily chart for dollar CAD. So again, dollar rallied here at the beginning of the month, and it's sort of consolidating around this 139.50 area. Yet to close on an end of day basis over the 140 line. So let me just put that in again, like we had 150 for yen. You see the resistance there. Again, I'm going to lose all these later when I come out of it because it's just speak with. I need a live account on here rather than just a demo account to try and keep all these drawings. So there's that 140. It's been quite, and I think that was a target area I had on the dollar CAD, wasn't it? 140, which wasn't met. So yeah, I think that one's been stopped now. I have to update things later in a minute. So there's 140 for dollar CAD. We are, bid again on that one. Euro 116.20. So we went down yesterday. Into the 116 area again. Remember, we've been pivoting through the 117 area here for most of September and the second half of August. I know, we were even talking about 120, weren't we? As at the middle of September, as this rally looks very set. However, we rolled over. The situation in France became a bit of a panic on Monday, a bit of a chaos. We're now talking, Lecourt is talking of actually possibly getting a new prime minister within the next 24 hours. Some announcements due again today. So really just sort of pushing off the inevitable in France, really. What are they going to do? The left and the right need to come together. There needs to be some sort of agreement on what they're going to do. Pension reform is what Macron came in and promised and started to move forward on. But the hard left in France in particular are standing against that. It's a long tradition in France. But obviously waiting in the wings is Mr. Le Pen and the hard right as well. So they've been rejected once by the French voters, but it looks like she may be getting another crack of the whip at the presidential election next year. But it looks like Macron is surviving for now. It hasn't helped the euro this week. Down. Last update was here on Friday. Looked like everything was all fine there. 117 again. There's that pivot area we're at, and big shakeout this week. Big move down. So from a high on Friday at 117.60. We've been as low as under 116 yesterday. 115.98 was punctured, so we finally found some buyers at 116 yesterday, but we're sat right on top of it now, just 13 pips above it. So the trend again remains to the downside. So you can see this week the dollar's having a good week. Aussie 66.40 again. That's come back today following the surprise from the RBNZ. Earlier in the week. So we're back to key resistance area at .66 and support at 65.65. So it's still pressured to the upside. So Aussie doing better. Sterling pressured like the euro, 133.75 today. And there's third day down as Monday's shakeout. And that's Tuesday's shakeout. Monday we actually rose and looked like we were moving back up over the 50 period moving average, but reversed significantly on Tuesday. and down yesterday and down again today. So these and again today, now we've breached that low level at the 33.85 level we were talking about earlier in the week from the beginning of September. So the end of September and the September lows now come into attention at 133.30. So that's the next downside target for bears of the cable rate. So again, another example of the stronger dollar, and obviously the Kiwi from that surprise shock from the RBNZ with a big blockbuster 50 basis point cut the other night has continued to unwind. Came back a wee bit yesterday, but we're down again. Oh, sorry, it's the daily, isn't it? What I'm talking about. That's the big down day on Tuesday. Sorry, it was, and then it was yesterday as well. It's followed through, didn't we? We went all the way down here to 57.37. It's down again today, but it did spike earlier to 50, back to 58. So 58 has been tested into and rejected again. So dot 58 is the one I was going to put in here on the Kiwi, and we're under that. So again, 3 days of strength for the US dollar for all sorts of reasons. Most of them are geopolitical, and even given the fact that the government shut down in the US. So that's the forex market at the moment. Indices we had a look at in our Renko charts. We'll come back to them in a minute. Well, let's look on with these. So you can see we are still all-time highs. Yesterday we're down a tad. Today we'll come to the trading positions in a minute. And we are still long these from the 1st of October, these markets. So we're long the NASDAQ. We're long the S&P 500, also from the 1st, which was here. Our stop loss says it's not there. It's not from the 8th of September. This is all. I thought I'd taken all these off this one. I'm sure I had, because it was. Never mind. So yeah, this is still long. All-time highs yesterday, and this S&P looks like it's up on the day at the moment as we just go into the opening trades. The Dow also. I will come back to this in the 5 minute. There's our. Again, our entry was back here on not the 17th of September. It was the 1st of October. We got long on the Dow and the other three, and it's pushed to intraday all-time highs, end of day all-time highs, but it's moved lower this week. It's my stop losses there as well. It might have actually been that close. This might have actually been stopped down. I'll have to check. Go and check my data later. Certainly, I'll check it for you tomorrow. So there's not been a great deal of news to move the markets with regard to economic data coming out of the US because of the shutdown. Obviously, we were due weekly claims. There was chatter about the non-farm payroll possibly coming out tomorrow. That hasn't happened. They seem as divided as ever, the Democrats and the Republicans, and many are saying that sort of suits the president's agenda potentially going forward. So we'll see how it all we'll see how it all pans out in the future. But everything's falling relatively nicely for him at the moment, the president at the moment. So stocks still consolidating at highs. The full-blown third quarter earnings start rolling in next week as well as we get into the second week of October. The bank earnings come the end of next week, so all getting a bit interesting. And so we could do. I want to say this. We could do with a bit of a cool down, to be honest. A bit of a shakeout. It's got a bit messy. Quite indecisive days, some high volatile days as well. So perhaps a clear out potentially. But anyway, stay strong. The 50 days all the way down there at 45,600. The 20 days probably around here at 4,600. Here on the Dow, just using the Dow as an example. S&P, similar sort of pattern. There's the 50-day at 6,390, so just shy of 6,300. Who'd have thought that? So 20 support there, 6.6. Yeah, so 6.6. You can see that technically 6.6. So we could see a shakeout easily to that if there's some of the big players miss their earnings or their forward guidance is as strong, or there's some jabber about the tariff impact. But none of that seems to be coming through at the moment. They seem to be holding up. It was the worry about the debt situation earlier in the week, and the the stickiness of the inflation, the weakness of the labour market. But all of that's been thrown off, and we've held, and we've continued to move high. So at the moment, just don't get your stop loss too close. Don't get it too far away either to take away a lot of this hard-earned profit in this move up. So that's what might be happening as well. People wanted to lock in these gains at current all-time highs, but we still got a long way to go to the end of we're just at the beginning of the fourth quarter, and we got a long way to go for the end of the year. So there's still potentially some legs in this. Equally, some might be taking money off the table as ever earlier in the year. But anyway, as far as the S&P is concerned, 6.6 is a key support area, 6,600. And then that level there where that blue line happens to be at 6,500 as well going forward. Stocks remain bid to the upside. So I'm going to wrap this up, guys. I've been blithering on for 40 minutes and there's been no news that's moved stuff. Let's have a quick look at where's my calendar is what I was going to bring up for tomorrow. Obviously, that's not a lot happening. We have actually, having said that, we got the University of Michigan data tomorrow, haven't we? Let me just find the calendar for you for tomorrow. That's not calendar. Obviously, these are university data. It's not a federal government data, but for tomorrow. So we've had lots of Fed speakers. There was nothing really in that pre-recorded announcement from Chair Powell that has moved things at all. So this isn't happening, although it's still in the calendar. The non-farm payroll date, that isn't happening. What we could see, obviously, we will see the Canadian data. Obviously, that's not impacted by the US government shutdown, although Mr. Carney seemed a bit too cozy, really, with Mr. Trump, President Trump, earlier in the week for my liking and for probably many people's liking. But who am I to call Mark Carney? He's very, very shrewd, very bright, intelligent guy. So anyway, so key data tomorrow will be this: the University of Michigan, the inflation, the consumer expectations in particular. It's continued to cool. Is it going to continue to cool? To round out a relatively quiet week because there's been no data, but monumental week when it comes to politics. France, Japan shut down with the government in the United States. Potential peace deal in between Hamas and Israel, and all-time highs for gold again, for stocks again. The bond vigilantes swirling. Worries about deficits, worries about labour markets, worries about inflation. It's all there and swirling and potentially move the markets. But as ever, my friends, trade what you see, not what you think. And let's just go back to our little trading setups that we had. It was on the Renko charts and the 5-minute charts. See how the open has impacted our positions. We closed the gold one, didn't we? And now let's have a look what's going on. And the short on the Nasdaq is now it's a little bit in the money. It was a little bit out the money before, wasn't it? It's now a little bit in the money. It's the S&P. It's got the Nasdaq. So that's the short we took on this pattern recognition here. It doesn't really look like it wants to go down, does it? But we'll leave that there. You see what's happening. So Renko, it's very clean. It's very simple in 30 seconds. It's box form. The time frame on your chart is what creates the calculations to use to create the boxes. If it's a trending asset, use it with another indicator as ever. Here I've got it with the 50 period, and you'd want ideally, not in a perfect world, 3 consecutive same coloured candles boxes before you take a position. So again, following the rules, you'd have gone 1, 2, 3, gone long there, and it got stopped out. So that's probably a losing one. 1, 2, 3 down. You got another one, and then it's reverse. So probably a losing trade. That's 1, 2, 3. You got in here. That's gone another 3 before it's reversed. So that would have been a winning trade. That would have been a losing one. That would have been a losing one. That's a winning one. Found resistance at the 50. That's a losing one, wouldn't it? If we entered there, if we'd entered on that third one there, it would have been loser. So just again, as I did, some I used Renko so much. I'm happy to get on just the change of the colours. So he had strong run up. But again, you would have entered. I would also not. You would have. I would have entered here again on that box there because we've gone to new highs and it's been confirmed there. So 230 yesterday. I would have entered high again. Position close there. We must have hit our target. I think we have, haven't we? Yeah. On the Nasdaq to the downside. So we had our target. There we are. We just had a little target to the 50. But again, a bit like the gold. Remember, it kept running. We'll go back to gold in a minute. This could easily keep running as well. So there's Nasdaq hit the target we set. So yeah, that's another. As with the Heikin-Ashi candles, Renko is simple. It's clear. But you do need to have a bit of patience and wait for the boxes to form and the colours to be identified to the downside. So the spread's got a bit iffy there on the Nasdaq. We are 50 minutes into it, and that's a bit heavy. Dow's a bit. There we are. Dow's a bit tighter. So we're short there. So yeah, that's looking that. Conversely, is actually looking positive. The Dow. I won't tell that now because I'm going to wrap up and go and find out what my live positions were doing. So there we go, guys. I hope that was a little bit of useful. Renko, it's clean, it's simple. I like it. I've used it many years ago when I first came across it. It wasn't great on some other platforms. Here on TradingView, it looks okay. It's not. I've done an in-depth technical analysis on it of the feed for the different time frames. But yeah, it's a good one to start with. And as with any indicator, that's all it is. It's an indicator. I've got a 50 period moving average on here as well. You could use other indicators, the MACD for momentum if you want. It's all price based, so put some volume indicators on it. The ATR is based on the average true range, is based on the Renko Platts. That's why we're getting that jaggedness of the ATR chart. Excuse me. It's not smooth like you see with on the other setups, on the other layouts. So you see the VWAP layout here. It's much smoother because obviously we're going up in steps. You see it's smoother here with normal candlesticks. Okay. Okay, guys, thanks very much. I'll see you tomorrow for the Michigan data. We may wrap up the week. Watch our reels. We'll have our weekly video up tomorrow as well. So take care, be good, be safe, and may the pips be with you as ever, my friends.